Hello and welcome. From whichever side you're going to watch this analysis from, welcome to analysis session week 16. Starting off with the economic calendar, Monday, April the 14th, we did have quite a significant amount of activities happening, but the most important that I want us to focus on is the trade balance of the Chinese yuan, whereby it did come out really positive, whereby if you look at the previous history, the Chinese economy has been exporting more than it has been importing. Now, this is really good because whenever foreigners have to buy domestic products, they have to use their domestic currencies to pay for the nation's exports. Let's say, for example, if you want to buy a vehicle in China, there's a probability that you'll have to change your local currency into the Chinese yuan to buy that. Now that strengthens the economy because the Chinese yuan is going to be in circulation. Now, if you look at this document from CNBC, we can see that China's exports skyrockets over 12% in March as trade wars drive businesses to front load shipments. Now, exports jumped last month in US dollars terms from a year earlier, according to data released by Customs Authority on Monday, significantly outpacing Reuters poll estimates over 4.4% growth and marking the biggest jump since October last year. In the first 2 months of the year, China exports had slowed more than expected, growing just 2.3% year on year, marking the slowest rise since April 2024. Imports clocked a steeper than expected decline of 8.4% from a year ago, their sharpest fall since mid 2023. But exports will likely weaken in the coming months as the US tariffs have skyrocketed, said Ziwei Zhang, president and chief economist at Pinpoint Asset Manager, adding that in the short term, I expect chaos in supply chains and potential shortage in the US that may drive up inflation. Trade policies remained highly uncertain, and this is something that we are very cautious about the markets right now, whereby we don't know. It's a trade war between the two giants, China and the United States of America. And this brings me to Trump starting to back off. Has Trump started to back off on his trade wars? Because last week Friday, Apple was given some leniency in terms of if you look at Apple devices, they're usually designed in the United States and then they're assembled in China. Now, these tariffs had this company in limbo. Rumor has it that the CEO called Mr. Trump and he was very worried about the European Union and Donald Trump 100% tariffs on goods produced in China threatened to upend its supply chain as seriously as the COVID snarls did 5 years ago. On Friday night, the US president handed Apple a major victory, exempting many popular consumer electronics that includes iPhones, iPods, Macs, Apple Watches, and AirTags. Now, a new and lower so-called sectoral tariff may still come on goods that have semiconductors, and a 20% tariff still applies to electronics shipped from China. Over the weekend, Trump pledged he will still apply tariffs to phones, computers, and popular consumer electronics, portraying the exemptions as a procedural step in a broader effort to remake US trade. Still, the timing for such a move remains uncertain. Until then, the surprise exemption marks a win for Apple and the consumer electronics industry that still heavily relies on the Asian nation for manufacturing. On Tuesday, we do anticipate climate count change. Now, this is the same as unemployment claims for the United States, whereby we do anticipate these numbers coming out lower than expected, which is really good for currency because it means that people are retaining their jobs. Moving over the day, later on in the day during New York session at 3:30 p.m. UTC plus 3, we do anticipate that the Canadian dollar is going to receive their CPI, their inflation numbers, whereby we do anticipate the CPI month on month release coming out lower than expected, and the CPI year on year still remaining at par with the previous numbers. Now, this is very important because this will be very crucial data to look at what the Bank of Canada are going to do with their interest rates moving forward. On Wednesday, we do anticipate CPI for the British pound, whereby we do anticipate that inflation also will be coming down from 2.8% to 2.7%, which will be very good for the financial economy or the British pound. Later on in the day during New York session, we do anticipate core retail sales, the month-on-month release, whereby we do anticipate these numbers picking up. We did start with employment, which came out really good during the first week of this month. Inflation numbers last week did come out better than expected, whereby we have seen a decline in inflation, which is good for the economy, and PPI numbers also came out better than expected in terms of numbers are continuing to decline. Now we do anticipate retail sales coming out this Wednesday. Now this will be very crucial because later on in the evening we are going to have the Fed chair who's going to speak. We do anticipate the FOMC coming out 27th of May, going to be the 27th of May, which is going to be on Tuesday, whereby there's a possibility, we don't know, and this will provide us insights if the Fed are going to start lowering interest rates earlier than expected. Now, back to 445 UTC plus 3, Bank of Canada, they're going to have their overnight rate, whereby we do anticipate also for them to hold their interest rates coming out at 2.75%. Moving over to Thursday, we do have an employment change for the Australian dollar, whereby we also do anticipate these numbers coming out actually greater than forecast. Unemployment rate, we do anticipate it coming up slightly higher from 4.1% to 4.2% at 4:30 a.m. in the morning. Later on in the day, we do have the euro main refinancing rate, whereby we do anticipate the euro to lower the rates from 265 to 240 basis points, whereby we shall, there's a possibility seeing weaknesses in the euro in the short term. Concluding on Friday, it's going to be Good Friday for the Christians to celebrate, and the holiday will go through Monday. So weekend is going to come earlier this trading week. Moving over to commitment of traders, we did see this is data as of April 8th. When you look at gold, now this is gold commodity exchange, we did see quite a significant amount of long positions being offloaded from gold. Previously, it was nearly 200,000 positions contracts. At the moment, we have seen at least 29,440 contracts being offloaded from long positions, and at the same time, we have seen 18,427 short positions being offloaded. Now, this is very interesting, whereby institutions are offloading both long and short positions. This could show us that there's a possibility that there is uncertainty in the markets, and institutions have a very big role in what they're doing currently at the moment. Now, moving over to financials, if you can go to the financials and then we go to futures only. If we move to the Dow Jones Industrial Average, we can see that assets are under assets managers and institutions. We have seen quite a significant amount of positions being offloaded. Currently, 2,463 positions being offloaded from long positions, sorry, and 543 positions being added on the shorts positions. Now, if you look at the Dow Jones Industrial Average, only 628 long positions were added, and almost 1791 short positions being offloaded. Now this means that institutions are favoring short positions compared to long positions currently at the moment. But what caught my attention was the S&P 500 consolidated. This is from the Chicago Mercantile Exchange, whereby we did see almost 67,000 shorts being added to the S&P 500 and 4,943 positions being offloaded from long positions. Now, this could be very, very impactful in the markets, whereby this shows that institutions, okay, there is some element of uncertainty, and institutions want to cover up their long positions and at the same time add more short positions because of the uncertainty with the trade wars that are currently happening with the financial markets at the moment. When you look at mini S&P consumables, the same thing we did see, whereby we did have almost 10,000 positions being offloaded and at least 4,000 long positions being added. Now, if you look to the stock heat map, this is on the weekly performance. This is the S&P 500. companies have started regaining. At the start of last week, most of these companies were in red, but as the week progressed, whereby we did see Donald Trump enacting the pause on tariffs, and people did start come to the table, whereby they started negotiating. We do anticipate the eurozone, to come to the table this week and discuss about it at length. But companies have started regaining after Trump announcing the 90-day pause in tariffs. Now, this is the S&P 500. If you go to the Russell 2000, we can see that, yes, some of these companies, smaller companies, have started gaining back what they have lost. Last week, most, if not all, of these companies were in red. If you look at the Nasdaq, which is a tech heavy index, whereby we can see Microsoft up 6% over the week, Meta 7%, Apple 2, Nvidia 12. Tesla is one of the biggest gainers, whereby they were nearly 20 to 30% down, but they have recovered, and this is very interesting to look out for in the near future. If you look at the Dow Jones Industrial Average, yes, this is the top 30 companies in the United States of America. Companies have started regaining back the loss that they did have after the uncertainty within the trade wars, which was very crucial. Right now, the markets are more sentimental compared to technicals and fundamentals. We did see even the markets not reacting to non-farm payrolls. We did see the markets not reacting to CPI numbers. We did see the markets not reacting to PPI numbers, because all eyes are on sentiment currently at the moment. Now, moving over to the charts, starting off with gold on the daily time frame. We did hit record highs last week, and we closed around 3,245. That was the high made, and then the markets closed at $3,237 an ounce. This is territories that we have never touched, and we are very interested to see what this new week has in store for us. Moving down to the 1 hour time frame, the markets did open with a new week opening gap around this region here, whereby we did see the markets filling in that gap, going to those record highs, forming relatively equal highs at 3,246. Now, this is very crucial for me. This means that there is liquidity residing above this region, and we want to see what the markets will do to this region. If we do get some sort of a clear breakout and a retest from this region, then this will enforce me to look for further buying opportunities in the markets, because currently at the moment gold is a safe haven. But looking at relatively equal highs and my backtesting in the financial markets, usually the markets raids that liquidity, comes back down, retests, then we might see that push to the upper side. So the region around 32.46 is going to be very crucial. I would want to monitor this price action as time goes by. It being a Monday, I want to be very careful, because Mondays are the days whereby the markets usually accumulate. We might anticipate an expansion Tuesday, Wednesday, or Thursday, but I will favor more buying opportunities. I would want to wait for the markets to come back down. If I had a Fibonacci from the low to the high created of the day, I would want to enter the market somewhere around this region, but not today. Let's say tomorrow during London Open, whereby I would anticipate the markets continuing to buy to the upper side. My stop loss just below these regions, below the opening Asian's low, which is at 32.11, for further continuations to the upper side. Now, I'm not going to have a specific target profit. This is going to be a trailing stop loss, because currently at the moment we are in territories that we have never been in before. Moving over to the dollar index. As mentioned, today is one of this week is going to be more of sentiment compared to technical analysis, because the markets still have fear within them, and the dollar index is one of the best indicators for you to use as a trader in terms of looking at sentiment analysis. We can see that ever since January 13th, we have lost almost 10% of the index. This means that there is so much fear running in the financial markets right now. And looking at how this daily candlestick is opening, we did close below this region that we were looking at last week, whereby at around 99.649. The markets closed slightly above, but today the markets open below. If today it does close below this region, then this will significantly impact that, okay, the dollar is kindly right now in limbo, and there is probabilities that we might still continuing seeing offloading of positions denominated in US dollars. So the dollar index, I want to keep an eye on it, especially on the weekly time frame, whereby I'll anticipate. This was my analysis last week, but currently where we are at the moment, I want to see in the next 3 days, 16 hours to go, what this candlestick is going to offer for me. But if at all we do close above this region here today, if we do get a candlestick that closes above this region, then this will give me confidence of looking for buying opportunities. Now, all of this is dependent on how this weekly candlestick is going to close, but I have a feeling this is going to be one of those weeks whereby the market is going to take a breather to digest everything that's happening in the markets right now. What is Trump going to do? What is China going to do? What is the European Union going to do? And then the markets are going to take actions as a result. It's going to react afterwards on the information that it is digesting. Now, looking at the dollar, at the volatility index on the weekly time frame, last week we did see highs of 60 on the volatility index, but we did close at around 37, which was very, very good in terms of consumers and traders gaining confidence back into the financial markets. The markets right now are at 34.56, meaning the markets can move either direction in the next 1 year, 34%. Now, I'll keep a close eye on the volatility index, because if you do see a spike in the VIX, this means that yes, there is still uncertainty in the markets, and the markets can push either direction very quickly. But this is very good to see currently at the moment, whereby we did open with a gap from 38, from let's say another 38 to 34, meaning that, okay, the tensions that we had in the financial markets over the previous weeks is currently calming down, and the markets could go back to normal trading situations. Now, moving over to the S&P 500, we did open with a gap. Now, sometimes with the financial markets, the market doesn't have, it's not a must for the markets to come back to these trading gaps. It is not a must for the markets to come fulfilling those gaps. But these gaps are very crucial for us traders, because it shows you the gap that we saw between Friday's closing price and Monday's opening price. Now, this is very important to us, because this gap shows us that, okay, investors are gaining confidence to a degree, whereby could we go back to 5,480 in the next few trading sessions. If we do get price action coming back down to this region, I would want to look for buying opportunities to the upper side, whereby enter long positions. My stop loss is going to be just below this new week opening gap, and I will be targeting the highs created at 54.82. That will be my outlook on the S&P 500. Now, on the Nasdaq, I'm going to utilize the same ideology. Now, remember, it being Monday, there's a very high possibility the markets are going to be accumulating. So what I'm going to do is wait for the markets to come back slightly down for a further push to the upper side, whereby I'll anticipate a buying opportunity just above that region, and my target at 19,213 for a risk to reward ratio of 1:2, which is very doable. It is within my risk management that I look out for. Now, looking at US 30, we did have this spike to the downside. This was around 6 a.m. UTC plus 3 today, and the train has already left the station for me in terms of this trade, and I would want to continue monitoring it, but there's a high possibility that we might see further push to the upper side in terms of the Dow Jones. Looking at the Russell 2000, we did gain quite significantly when Trump did announce the 90-day pause tariffs. We did gain at least 10%. on the day for these index, around 10%, more or less 10. And then we started retracing because the markets never shoot like an arrow. We did come back down. The markets respected the Fibonacci level to the T, and I was anticipating that the Russell could continue moving further to the upper side. Friday we did have an accumulation. I'm waiting for a manipulation whereby a raid on liquidity either to the upper side or to the lower side, but we did see prices coming back down to this order block that printed back on 10th April 2025. And I want to see how price action is going to behave around this region. If today does close above this region, then it will give me further confidence of looking for opportunities to the upper side. My stop loss is just going to be below this Friday's closing price. This was Monday's open. This was the first candlestick of the day, just below that low. And then I'll be targeting the highs created back on 9th April 2025 for a risk to reward ratio of 1 is to 6.5, which is really, really good. Looking at treasuries have started ticking to the upper side, meaning investors have started buying into the 20 years treasuries. Now, this is an indicator. I don't trade your TLT because my broker does not allow that. But looking at this is a good sentiment whereby investors are gaining confidence back into the financial markets. Okay, we might see further opportunities of prices moving back to these highs slowly but surely. Now, looking at oil, last week was very, very decisive for us because we did see oil going back to $58 a barrel, whereby we did discuss that it's unprofitable for oil selling companies to be selling oil below $60 a barrel, but the week did close at $64 a barrel. And we want to see low oil prices usually signify a recession in the financial markets, and we want to see how oil is going to behave this week. Now, this is Brent oil and WTI, almost a similar pattern that we are seeing printing in the financial markets. Moving over to Bitcoin, Bitcoin has been holding its price relatively well against other assets. In my point of view, it's been gold that's been gaining, then Bitcoin and other currencies that are considered to be safer havens. But looking at this asset, yes, there are further opportunities. If we do get supply at around this region here at $83,000 a Bitcoin, I would look for further opportunities of buying into these markets. If at all prices do reject this region, we do get some sort of support forming around this region, then I'll look for further opportunities of buying to the upper side, potentially coming to this demand region of the supply region of 88,500. Now, looking at the Chinese yuan, I want to look at it on the daily perspective. I like the way how price action is forming. We did get highs that dated back to several years back at 7.3502, and the markets rejected that region significantly. Looking at how the daily candlestick is printing at the moment, whereby we do have 14 hours to go, we don't have any wick to the bottom side. Now, this could signify that there could be inefficiencies at 7.2910. I would want to look at selling opportunities on Chinese yuan just for the day, a short position here, stop loss just above that region, and then I'm going to have my target just at the opening price for a risk to reward ratio of 1 is to 1, which is doable for me. Moving over to currencies which are safer havens currently at the moment, we have been seeing that other assets are considered safer havens compared to the United States dollar because of the trade wars that are happening, and we did see that prices of euro peaking against the United States dollar. So did we see the prices of British pound gaining against the USD? The Swiss franc has been one of the best gainers because the Swiss franc is considered a safe haven when there's economic turmoil in the financial markets. So is the United States dollar, Japanese yen. I want to look at how prices is going to respect 140.159. But currently at the moment, all of these assets, the train has left the station, but I'll continue looking for more buying opportunities against the United States dollar. Looking at USD card, we do anticipate them to lower the interest rates during this coming week, and we want to see how the markets are going to interpret that data moving forward. The New Zealand dollar has been gaining, even though we did see the Reserve Bank of New Zealand last week lowering their interest rates, but the markets still consider the New Zealand dollar against the USD as safe haven, and we have seen quite a massive uptrend over the past few trading days, whereby I do anticipate this trend to continue moving further to the upper side up until this point. If I was to pull a Fibonacci from the high to the low, we are currently in the golden ratio, so I would want to see how prices are going to react to this region here. That's going to be it for me for this trading analysis. If you have reached this far in this video, I want to appreciate you. And it's all about learning. Take care of yourselves. Risk management right now is more crucial than a strategy, because if you blow today, what are you going to do tomorrow? So take care of yourself. Have a peaceful week. We shall be looking into the markets and following up on whatever we have just spoken about. Stay safe. Take care of yourselves.